All right, guys. So sorry about the delay. I was actually did not hit the live button, so I was talking to myself for a few minutes. So I'm just going to do this all over again. Um, Basically, I'm just going to cover the markets a little bit here. Can everybody hear me? Just so I can, just before I start doing this again. All right, good. Okay. Yeah, sorry about that. So yeah, essentially, I'm just going to do a little quick market wrap up real quick, and then we'll get into some Q&A. I have to remember everything I just said to myself, apparently, but usually when I start streaming, it automatically hits and goes live on YouTube, but it didn't this time. So, all right, sorry about that, guys. Anyway, Spider's negative today. Had a nice little sell, but just kind of choppy Opex action. Powell jawboning the last couple of days. He said some absolutely ridiculous stuff. If you haven't read anything he said, if you want a good laugh, I advise you to read it. It's hilarious. But market's coming down and testing this lower trend line here, one we've been looking at for a while now. Getting a nice bounce off of it. Not surprising that it held. Not a lot of volume today. I mean, just 54 million shares traded. So typically you're not going to see a breakdown on that type of volume. Also, the VIX was only up about 4% today. So that right there is telling you that the market participants were betting on a bounce on this trend line and betting on a recovery. Yields lower today, which did not help tech at all. And that's easily explained by the fact that tech is just so overbought going into especially an Opex week. That's why I made the video earlier about those FANG names, partly why anyway. But I've been talking about how overbought Apple is and why to be careful about it. Be careful here because it's looking a little trappy with this gap up, especially with Options X coming up. Amazon taking a nice little dump today. Finishing a little bit lower, still holding this all-time high pivot, but nice little sell there. Facebook, this is a level I'm watching, is 341.77. That's basically the low of this inside bar. If we close below that tomorrow on a weekly time frame, that's a failed bear flag, or excuse me, failed bull flag, or failed inside bar rather, and that could spell trouble for Facebook here. Nvidia also taking a hit today. This thing was just way overdone. They do have a stock split, I think, on the 19th. So it was running up into that. That is this Monday. But that put a big drag on the semiconductors. And semiconductors actually looking a little concerning here. So we had this nice bullish pattern, broke down, got back above the all-time high, and then now rejected again. Look at the volume here. It's good volume. So that tells you there's some participation in the selling there. Semiconductors are a leading indicator. So that is something we're paying attention to all the time. So I was trying to tell you about the KRE. So you're talking about the monthly time frame, the stairs up, elevator down. So I shared this on Twitter earlier. Notice how these moving averages, they're starting to converge and slope lower. And you're getting a little bit of spacing here. If you get a little bit more spacing, it's telling you the trend is now down. Now, the trend is still fine on the weekly chart, overbought, but the monthly chart, this went parabolic, and then you had a reversal. And it's holding this support for now, but if this loses this, it's going to come down. It's going to get ugly. So KRE regional banks, KBE, same kind of deal. The XLF isn't in as bad a shape, but it also has like American Express and some of those other. It's not necessarily a bank ETF. But again, reversal there on XLF monthly as well. And by the way, if you're going to own anything right now, swing trading wise, I'd advise you to own the ETFs like XLF, XLE, Jets. That's the reason why I own the Jets and not Southwest or Boeing. Just because of earnings, you never know what's going to happen, and this mitigates some of your risk. But Jet's a little bit disappointing here. Ultimately, though, this is a weekly chart trade, so I'm not worried about it. As long as it holds the 50 moving average and this breakout area, I'm fine with it. I'm fine with it taking out this pivot. I'm not happy about it, but they could easily jack this thing back up tomorrow. There's lots of games that get played with Opex. Same thing with Boeing. A little disappointing here, but you know, you got that 200 moving average right there, and you got that double bottom support. I think it's fine. I wouldn't be surprised if maybe even after Opex week, that's when they let go of the shorts and push it higher. Let's see what else I want to cover here. Oh yeah, so XLE. Yeah, again, under pressure as well. I thought this one had a chance to put in a reversal here today and close higher, but again, under pressure. You made that lower low yesterday. I talked about that. And we gapped down, rallied to the flat line, and then pushed lower. So this thing's looking under pressure. And actually, if you notice here, this is a little small head and shoulders pattern. So that would bring you down to about 48. So there's a gap fill there, and then there's support here at 46.25. But the target on this is about $48 even. So just keep an eye on that. And that's also now crude coming in a little bit. Sometimes these producers, XLEs, you know, the GDX can be a leading indicator for gold. Sometimes the XLE can lead oil. So just keep an eye out for that. Oil rolling a little bit here. So maybe under pressure. Again, it's going to have a lot of support though at 66, 68. So I don't know if I'd necessarily be a buyer long term there. Maybe as a swing, maybe as a quick trade, but yeah, I do think oil's coming. It's got to come back and fill a little bit. I did close my SPXY long position, which is basically just like short the VIX. That was just a hedge. Small gain on that. I want to get out of that, raise some cash. I do think we're going to have some type of a like sell or something next week. I do have a cycle pivot next week. Now we may have already put in the pivot high. The high might already be in and we might just sell next week. But I do have, based on the cycle work I've done, we should have some type of move next week. And I would assume that's to the downside because we traded up into it. And if you look back, really the cycle I called in May, I said 3rd through the 7th. We got it on the 10th. I had one on the 16th of February. That was perfect. The only problem was the depth of the corrections were much shallower than I anticipated. And that just shows you the central bank liquidity that's going on. But I think this one actually could possibly be the one that has some legs to it. If you look at the yield's getting hit. You know what that means. The market's worried. It's going to have support here at 1.2. I would be looking to possibly buy in that area for a bounce. And the other elephant in the room just keeps chugging higher every day, dollar index. If you take out this pink trend line here, goes above that, you're triggering an inverse head and shoulders, a big one. So dollar index is warning you, yields are warning you right now. Let's see what else we have. Dow was actually positive today. Transports were flat. But yeah, Jeff definitely have my cycle next week. So I am expecting some type of movement. And you guys know I've been talking about August as being a pivotal month, but I think we could possibly start to roll over into that before the downside really gets started. Again, could I be wrong? Yeah, absolutely. I mean, like, we did get a sell in May and go away. I mean, we did have 2 weeks of downside, but what was this, like 4%? And we didn't even get to the gap fill at 400. So yeah, but this one looks, I mean, I do think that this one's going to have a little bit more legs. We haven't had a 10% correction since basically a year. So you got to think there's something going on. And I mean, yeah, there's lots of liquidity, but there is the same amount of liquidity here when we had this correction as there is now. So it's not like it can't happen. But the VIX again, so I was thinking, you know, I've been saying for a while, I want to see one more move lower, but at this point it looks like it may just hold up and it may just base a little bit before it takes off. So I'm watching that very closely. I want to accumulate a little bit more VXX, but I'm at about 5 or so % in my portfolio and I don't want to go over 10. So if I do add, it's got to be at the right spot because I'm not going to add again after that. Just it's too much risk to take on. So but I am watching this closely. I'm watching everything closely for signals right now. Let's see some of the other positions. Yeah, Cloudflare finally got going to the downside. This is a short I have put in a lower low on the daily, so nice. Finished off the lows, but you got that lower low and closed below the 20 moving average. So this should head back to 95 and possibly 93. And then you also had Cloud Software, the IGV here, which closed below the 20 as well. And that was, so this is like a basket of cloud software stocks. Got Microsoft, Zoom's in it, Adobe. Adobe's just been our house though. Adobe's holding up really well. But yeah, so let's see, I don't think there's anything else really. Oh, IWM, really quick. We got into this trend line. If this trend line goes, it's going right to this 200 moving average, right to it. But it's holding up for now. But we had a lot of volume here on this sell-off. And now that AMC, the IWM's in trouble because now that AMC is weighted at, I think, 0.76%, which is the highest weighting by basically 2 times. The next highest weighted company in the IWM is Intelia. And this thing's also coming back in too. But if AMC loses 32, not surprising it got a bounce here. This is a big gap. But if AMC can't bounce here and it heads lower, the IWM's cooked. So just keep an eye out for that. Let's see. Oh, let's talk gold really quick. Gold's actually holding up really well considering, I mean, I'm not gonna lie, I was a little concerned about this. Just the size of this move. But what I do like is that you had a bear trap here. You see what they did? They put you a bear flag in here, then they closed you down below this low, and then they ripped your face off. So they did trap bears, so that's a good sign. If it consolidates sideways and pushes back above these moving averages, it can attack this red bar high. And if you close above this red bar high, it's over. It's going a lot higher. But until then, let's not get too excited. They could easily just smash it back down. Who knows what they're going to do with it. And then I tweeted out about this last night. Silver, I have a feeling this is like just kind of a hunch. They're going to break this down, although it's taking this bear flag a really long time to play out. Normally when it takes this long, I mean, let's see, 1, 2, 3, 4, 5, 6 days down. It shouldn't take more than a week or two for this to break down if it's going to. And it's already, we're coming up on a month almost. So I think if they do try to break it down, I will definitely be a buyer, not at this trend line, not at these trend lines. These trend lines, you do not want to buy these anymore. I want to be clear about that because see what you're doing? You're building up an army to attack these trend lines. You don't want to buy this anymore. Now, if it went straight into it, yeah, we'd be a buyer. See, straight into it, straight into it. But it's consolidating to attack that. It's building a base. But the area that I would be buying at is in this $23 area. But monthly 20 MA sloping up, and then you have this green bar low, which would be kind of like your inside bar here. So I think that if they do knock silver lower, it could be a more of a played out bear trap where they're just shaking out the weak hands. I really think, and I said this a month ago, I said that it's possible that this was just a shakeout, and it might be. If gold rips higher, it's going to be obvious that this was during, remember, this was during Opex week in June. So they put a lot of fear on the tape with all these big red bars because the trade just got overcrowded to the long side. You know, everybody got excited and wanted to get back into gold. Bitcoin was coming in, so money was looking to rotate, and they had to flush out the weak hands, in my opinion. But again, they could easily paper price smash this right back down for all we know. And with yields, if the market does roll over, it's likely that, you know, if yields come back in and the market rolls over, it's likely that gold probably sells off initially before the dip is bought. That, at least historically, that's what happens. All right, so I don't think I have anything else. I think I got to everything. Let me just double check. Talked about the airlines, yeah. ARE. Okay, yeah. All right, so we'll just get into some Q&A. All right. Gammon was on me. Okay, so now I don't feel as bad. I literally, I normally when I start streaming, I push the start streaming on my program. It automatically just starts going live on YouTube. So it just didn't this time. So I was talking to myself for like a good 10 minutes. But I think I got everything covered. So regional banks, the KRE. Yeah, I'll tell you why they doubled. 120 billion a month in liquidity. I mean, there's no fundamentals for any of these names to be higher. It's not like these are, you know, tech growth stocks that like have huge future earnings growth potential. I mean, they're just banks, and you know, it's not like yields are at like 10-year highs or anything. Like, so it's not like they have any. I mean, they're so exposed to all these toxic assets. But this is just liquidity that has to find a home. But yeah, KRE's, this thing went parabolic up, and not saying it's going to, but a lot of the time that's how they come down. Especially these commodities. A lot of these commodities went out of control. Like copper does this, you know, historically it's done this multiple times. Parabolic up and, you know, pretty hard down. This time it went really hard down. Hard here as well. I think corn. Yeah, corn, same thing. Speaking of commodity, how about lumber? That's nuts. Down to 490 right now on the July future. 1700 on May 7th, May 10th. That's, I mean, when I said I had my downside targets at 1,000 and 850, and I thought it would hold up there at least for a little while. It just, no, right through that. Yeah, they knew about Amazon. I mean, Pelosi was buying about like $2 million worth of call options right before that. Before she basically voted on the deal that gave them what was that, the Jedi agreement over Amazon or over Microsoft. So she buys a bunch of call options on Friday, and then over the weekend, oh, the Speaker of the House, you know, just is in government voting on legislation that directly benefits a company that she owns call. It's not like she was owning common shares. Like she was buying calls like for a couple months out. Like that's an aggressive bet. Like you can't get more blatantly obvious that you're corrupt than that. Like it's not. But, you know, it's DC. Yeah, junk bot. Yeah, jeez. And that's the official inflation rate. So what would I be a buyer of? I think I went over this in the video. I don't know if you saw it earlier today. Let's see. There's a few things I do like to the long side. Like I like, if you're okay with a little bit of political risk, I like some of the Chinese stocks. Alibaba. And I know there's a lot of talk about, like, you know, China's gonna, oh, they're gonna, you know, kneecap Alibaba and Baidu. Yeah, they're gonna flex their muscles. You have to remember it's also the 100-year anniversary of the CCP, so they're flexing their muscles a little bit. They're not. Alibaba is their golden child. Baidu is their golden child. China's a very proud country. They're not gonna hurt these companies. They just want to keep them in check. But a good level here that I like for Alibaba. By the way, it's actually in a nice level right now, but about 175. If it gets down there, that's your long-term buy there on Alibaba. But I like some of those Chinese names. Again, Baidu, Alibaba, VipShop's nice. Still enjoy this one. I like for a bounce right now. This one, I like the where is it? I like this level a lot, and I do have a like potential like mini cycle that played out, or it hit last week, I should say. Now it's bouncing, so this thing should get a nice little snapback rally. It's really oversold right now, and if the market does roll over, I kind of like this because it's already so beaten up that it's kind of not, doesn't really have any ground to cover. I am a little disappointed in IQ though. This one was holding up. I almost sold it for like a 3 or 4, I want to say that was more than that. It was like 5% game, but I was convinced it was going up to attack this $16, $17 area, and it just never got there. And we rolled over, but again, it's fine. If it takes out this pivot, I can stop out. You know, it is what it is, but a little disappointed with this one. But again, still think it's kind of oversold, so it's got a fighting chance. Some other names that I would like consider, I pointed out in this video earlier, like PG, actually PG is breaking out now, but just defensive boring names, Procter Gamble, things that companies that make things that everyone needs even in a recession, you know, the J&Js of the world. I do kind of like Amgen. I like this long-term chart. This is just a nice steady uptrend. It's not overbought. It's not extended. It's just hugging this 20 moving average and just holding this trend here. So that's it. I mean, the market really flushes lower. You could get a good buy on that. I think that's a safe play. I also, again, I pointed out in the video I did earlier, I know this is a little bit of a riskier name, but I do kind of like Netflix, honestly. Got rejected pretty hard at this gap fill, but the reason I like it is if you look at this monthly time frame, it's like it is the only FANG stock that's not absurdly extended on the monthly time frame. This is actually like a pretty good bullish setup, honestly. If I had to pick one FANG stock to own, I would buy this one. I think it has the most upside because it's the least overbought and it's done the best amount of consolidation. If you look at you know, Amazon, for instance, it didn't even get close to its 20 moving average. Nvidia, you kind of made like a little test candle, but I mean, now it's just in the stratosphere again. Microsoft, absolutely in the stratosphere. Google, in the stratosphere. Facebook, a little bit better. This chart's a little bit better. Facebook's not as bad as some of the other ones. And then Apple, again, not even close. So, I mean, stocks can't get too far away from their 20 moving average before they have to go check back. I mean, look at throughout history, even when Apple was in bull markets, it still had to come down and check back to the 20 moving average and pierce through it, and here your little test candle here. And yeah, so this thing's going to come back in. They're all going to come back in eventually. You could buy another, I mean, like the semiconductors, if you can get them at a good enough level, a cheap enough level. I mean, the electrification of the future is definitely a thing, and yeah, semiconductors are just in everything now. But I mean, just look at the trend this thing has been in. It's been a buying opportunity on pretty much every pullback ever. So HYG puts. You mean the junk bond ETF? Yeah, you could. I mean, that's probably the way to play it. I wouldn't short it because, I guess you could short it because this isn't going to like rip your face off if it starts going higher. But if you buy puts, just know it's a gamble because this thing trades sideways like a lot. You notice it has a very low delta. So unless it moves, unless it gets like a really big down day or something like that, those puts are going to have a lot of time decay on them. Or just give yourself time on the clock. Give yourself like a good go out, at least like 8-9 months on your expiration. Yeah, the VIX. Did I go over the VIX? Can someone remind me? Because I know I went over it in the first 10 minutes. I'll just go over it now. So I've been talking about, like, for a little while now, I want to see a flush out in the VIX before I really get interested into it. But it looks like, and I talked about this in the very first video I did for Jason Burek, that I was pointing out this pattern right here. You notice how it has these, I mean, this is just how the VIX trades. You have these falling wedge patterns, obviously. And sometimes it breaks right out like there. But then sometimes you get kind of this little weak breakout and then a base. And then, you know, this weak breakout and then a base, and then a weak breakout and then a base. It looks like we could be doing that too. And the same thing, I think you were just saying, yeah, it's sort of based a little bit here. You had a little pop and then it kind of just consolidated. Yeah, so with that said, I'm not sure if the VIX is gonna if it's going to make another low. If it does, that would probably coincide with SPY hitting like 440, 444. And that would probably capitulate like all the bears in the market, which is exactly what I want to see. So you'd have the SPY like way up here at this upper trend line. It'd probably be up in this area. Yeah, maybe even 446, 447. But if it doesn't, yeah, it could base here. I am thinking about adding to VXX, but I have about 5% or so of my like buying power in it, and I don't want to go over 10%. I'm fine with 10%, but if I go up to 10%, I'm not adding again, is what I'm trying to say, and I want to make sure I add at the right time. I don't want to add now and then have it make another lower low, and then now I'm, you know, kind of stuck. But so I'm really watching this careful for a possible entry here. But also the put call ratio, watch that. If we flash below 0.4 again, look out. I don't really know too much about Russian stocks, to be honest. Oh, so you're saying that a Chinese company is like engaging in shady business? You know what else is you know what else Netflix can do? They can buy Viacom. Viacom's trading at a ridiculously low PE right now. I think their forward PE is like 9 or 10, and I think the forward PE of the SP 500 is like 22. And this is a company that pays a 2.3% dividend. I mean, it's CBS. Like, this isn't like some, you know, small cap junk company. Like, it's CBS. And they have their streaming service. Now, they were in talks with, there was rumors about Roku and was the other one, Comcast, was rumored to be in talks with Viacom. I like this as a buyout target, honestly. If you have some spec, I know some of you guys were in this trade with me, and I know some of you made money, but if you got some spec money, like, I wouldn't even be against owning a little bit of this. I mean, it's just how cheap it is right now, and the fact that it's got its own streaming service. Netflix could buy Viacom for sure. Yeah, SVXY is just the inverse of the VIX. That was just a hedge against like some of my short positions, just in case the market like kind of had a blow off scenario. That's the only reason I had that. So oil, what do you want to know about oil? I think it's going back to 66, 65 or 66, 68 in the near term. I think XLE is kind of indicating here that there's some pressure in energy. Now, again, like, this isn't like, you know, I'm not like trying to get on the bear train here, like on oil. I'm just saying, when you look at this chart, especially if you look at a longer term, look at how extended, look at how sharp of a move this is. This is a serious pivot right here, because you had a major breakdown in your bottom and a reversal, and then you started consolidating bullish, and then it failed, and you went right into double top. You cut through all these moving averages. It's just overbought. That's all, and that's just the nature of markets. So again, I'm not like trying to get on and say like, oh, like, you know, I'm an oil bear or anything, but you know, that's just the way I see it right now. Say oil's just got to do some backing and filling. And then VXX, so UVXY, it generally trade. I think if I'm not mistaken, this one is just like a little bit more. So the difference is between the two. The VXX is they both track short-term futures on the VIX. This one has like a lot more decay to it, and if I'm not like I could be saying this wrong, but I believe it's because it tracks like really short-term futures on the VIX, and that's why the decay is so bad. But when it gets going, I mean, it can absolutely melt faces. The problem is you don't want to hold this for a very long time. Whereas with the VXX, I can hold it and just treat it like an option. So I'm not going to put like you know, an absurd amount of money, a certain amount of buying power into it, because you know that there's going to be some decay to it. Whereas with UVXY, it's much harder to trade. Like if you don't time it perfectly, you get stuck in the trade and it just grinds lower forever. So that's why I don't like the UVXY. Yeah, all of those all like those other there was I think it was 2018. They made a rule like some of those ETFs, the UVXY was like it was like 3 times the VXX, which is already like basically a triple ETF. So the UVXY, they used to be nuts, but then you know Wall Street complained because there'd be a down day, and then you know a bunch of people would buy calls on the VIX and these VIX instruments, and they would absolutely just get hosed on it because the volatility was just insane. I really want Wall Street bets to try and short squeeze the VIX. That's just like my pipe dream. Like why can't they just learn how to gamma squeeze VXX? Yeah, exactly. Yeah, everyone's just talking about, I remember, and I tweeted this like on, this was 7/6, this was Monday. I tweeted this Sunday night. I said, look, the oil trade, the long oil trade is getting really crowded. I'm just looking at, just gauging by sentiment. Because as soon as we broke through 75, everyone's like, that's it, we're going right to 100. It's a foregone conclusion. It's going to happen. And it just rubbed me the wrong way, especially going into that pivot. I was like, yeah, I think it's probably going to need to pull back here. So that's definitely a good contrarian point there. 10x. You know what else is you got to be careful for with those. That's crazy, 10x though. You know, you got to be careful for with those leverage ETFs is if you own options in them and they do a reverse split, they can absolutely screw you, because I don't know why it works this way, but say that it does like a 4-for-1 split. If you own calls, let's say $10 calls or whatever, and then if it was 4-for-1 split, even if the index spikes, it's like they don't pay you out what you should get paid. I've seen it happen to people before where like they should have made 20-30% on their calls and they made like 7 because of the reverse split, which is kind of BS, but it is what it is. So if you ever in those with calls, just make sure you keep an eye out for those reverse splits. Yeah, they all reverse split like crazy. I think what was one I was looking at today? There's one that was getting pretty low. Not TWM. I don't remember. It's one of those. But yeah, they all have to reverse split every so often. Hey, Ian, how you doing? I sent you an email, by the way. I got back to you. Technical. No, it's just VXX, as far as I know. This is actually an ETN. It's an exchange traded note, not an ETF, too. Nice, good. Yeah, right. They'll all eventually go to zero. But it takes a really long time, though. All right, who else has got some questions? Shop and Roku, sure. Shopify. $13.50. Yeah, if you here, let me just look a little bit more here. Yeah, if Shopify rolls over, if you lose this kind of like low pivot here in this channel, yeah, it'll probably go right back to about 1300 or so. Yeah, it'll retest this breakout pivot right here. And bullish pattern, like bull flags at all-time highs, extreme highs, have a higher tendency to fail. So you have this bullish consolidation, but they have a lot higher tendency to fail when they're at extreme highs. So that wouldn't surprise me. And Roku actually had a nice move, but let's see. It's got support right at about 390. I don't really see anything wrong with this chart though. It's holding up pretty well. I mean, it could trade back to 390, but if it gets there, it's probably going to have some support, and then you're going to have a little bit more support at about 375. That's if it rolls over. So I don't really use options, like I don't do cover calls or anything like that. Typically, I don't trade options as much as I used to, but usually what I'll do is like it depends on the situation, but like you could, like let's say I'm long and I want to head short. You just buy like, let's say you just want to buy short the market, you could just own a SDS, which is like 2 times short the S&P. Or you could, if there's a certain sector, like a couple weeks ago, I owned Apple to hedge my QID, which is short the Nasdaq. So I bought Apple as a short-term hedge to that, and then the SPXY, that was just again a short-term hedge in case volatility made a leg lower. So, but I don't really use options that much for that. I think that's more of like a strategy of like a position trader. So somebody's going to be holding and just holding trend for a more extended period of time, but I generally try not to hold for too long. I'm more of a swinger trader, so, but I will hold things for longer periods if it makes sense. Yeah, gold's kind of just like under the radar right now. Nobody's really even talking about it. It's kind of just been quiet lately, ever since that flush out. But they did, again, like I said, they trapped the bears here, so that's a nice sign. I like that. Bear traps are really powerful. I know a guy who literally trades, he's a day trader, and like almost the only setup he ever trades is bear traps. Like that's it. But it's a powerful setup. And if you want to know how powerful it is, just look at Just look at the S&P, you know. Every time they close it below the 20 moving average, they just rip it back up. Oh, it's got below the 50 this time. Oh, okay. Rip it back up. Oh, you got below the 100. Oh, boom. Every time they, you know, so bear trap's a pretty powerful setup. Yeah, yeah. I like trading options when the implied volatility is low, because then you're putting the odds in your favor, for sure. I'll trade options if I see a stock that's like, if I look at the chain and there's a really big discrepancy between the spread that I like, and I think it's got a chance to get there, or like 5x, I'll do it. Um, or sometimes if I'm trading like a stock with a low delta, like Walmart, you know, you're not going to get a huge gain out of Walmart, but so, you know, you could buy call options to get yourself a little bit more leverage, because, you know, a big move for Walmart is like 5%. So sometimes you could play options to get some more leverage in some of those lower delta names. Crashing SPX. All right, let's look at these. All right, so you're like, if you're, we're just having fun with this here. Right here, 2584. See this gap here? If it goes straight into that, you can take a stab at it there, but it's probably going to go to that 200 moving average. The best buy area is going to be right about $20. But if you want a quick in and out trade, you could probably get it at this gap fill right here. It's PCT. This one's too new for me to trade. The only thing I can say is maybe 15 bucks, but I don't trade new issues like this just because there's not enough data. And then, yeah, so this one, there's, yeah, gap fill, same thing. Actually, you're kind of right into it now. So if you wanted to take a stab at it quickly, you want it right there at gap fill. But this this name's a dog with fleas, just so you know that. If you want to play with it, that's fine, but just be aware of that. Yeah, I was talking about the airlines. I still like them. As long, like, I know it lost this pivot today. We made a lower low. I don't like that. But this is really a weekly chart that I'm basing this trade off of. Notice how you've got the 50 moving average that you're coming right into. And then you see this up move, consolidation. This is your breakout area. As long as you hold this area on a weekly closing basis, you're fine. But, I mean, if the market rolls over, everything's going to roll over. And I'll gladly take a loss on JET on Jets if VXX is up 30%. So I won't shed any tears about that. Yeah, the XLF correlate and XLE, anything that's a high yield play. That's kind of where that's kind of partly why I based partly where my thought process was, because we're coming into some support here for yields. They're probably going to go a little bit lower, but it's coming into support soon. And so that's why one of the reasons why I was thinking about that JETS, because that will do better when the yields are bouncing, for sure. Yeah, Boeing, same thing. Really kind of the same thing. Okay, so this is, that's right. So this is what you want to watch on Boeing. I didn't even draw this line incorrectly. 1 second. Yeah, there we go. So watch tomorrow. If this closes below 222.58 on Boeing tomorrow, get out or don't own it. But if it holds that, it's fine. Perfectly fine as long as it holds that. That's all you really need to know about Boeing. But I still like this. I still like this chart. A lot of the defense names are actually holding up really well. Look at Raytheon, Halliburton. Well, Halliburton getting hit looked a lot better the other day. It's getting hit pretty hard now. And I think what's Lockheed? Yeah, Lockheed. This is a nice chart on Lockheed Martin too. A little higher low, nice bullish consolidation. Yeah, Disco. So Disco's pretty much gonna trade kind of with Viacom, but this is a tough one. It's tough. It just can't catch a bid. This area is nice support. The problem is it's you've kind of just grinded into it. I would like it a lot better if it went straight into it, you know, like straight down. Support's going to mean a lot more then. Whereas now it's kind of like building a base here. But I think ultimately, if you're holding this, if you're concerned about holding this for a while, you're fine. Like this is again just like Viacom, the valuation's ridiculous. I would not be worried about holding this name. Yeah, I mean, it may want to get back down to the 2660 area, but again, it's so oversold that I don't see it really flushing or like having any type of major move down. But eventually, it will bid. I really like. Yeah, I still like this. The longer term chart on uranium is awesome. This is great. Like, look at this bear market. Like, this is market cycles right here. Look at how long of a bear market this is, and then you just have this capitulation low after it's already ridiculously oversold, then a reversal, and then that ends up being the low, and now you're back in an uptrend. So I really like uranium here. Uranium can, I mean, it's gonna, I'm not saying it's gonna rip tomorrow, but it might take it some time to get through these levels, but uranium could be like one of those things that we look at in a few years and we're like, oh wow, like, you know, that was it. That was the low there. That was the, and look at the volume here. So there's a lot of buying going on here. Yeah, I did gold. I'll just quickly cover it. Basically with gold, you had this little bear trap here after the flush out, and I said like a month ago that this was possibly an Opex, basically Opex related flush out in gold to get the weak hands out because it was a little crowded short term. But your first task is getting above these moving averages. It probably needs to consolidate a little bit to do that. But if you close above this pivot high here, it's probably off to the races. How to use vol? I'll definitely consider that. Here. You can email me there, so if you want to get a hold of me. Yeah, but that would be a good idea for a video, just volume analysis. That's one of the most overlooked, and I see a lot of experts on, like, traders that I respect even. I like their analysis. And even they get excited about these moves, and I'm like, bro, like, there's no volume here. Like, you can't, especially during, like, you notice, like, the 4th of July and Memorial Day week, where was it? I mean, like, during periods like this, like, there's 35 million shares traded on the S&P Spider, and you got people like, oh, it's going this way, it's going that way. There's going to be this stock breaking up. Like, what do you mean? There's nothing happening. All the institutions are at the Hamptons. They're not trading. You know, so you gotta pay attention to volume. Volume will tell you where the big money is, and the big money is the ones that move the market. We can't move the market. We're like ants. Institutions have billions of dollars. They're the only ones that can move the market. trying to make it my full-time job. We're getting there. Cat, like caterpillar. Oh yeah, this one. Yeah, this is a vulnerable name. Get rid of this. Let's see. Yeah, if this starts breaking lower, this has a lot of downside in it. This is really so. Okay, so here's a good example of volume. The reason why I say it's got a lot of downside in it potentially. Look at the selling volume here. That's people getting out. Like big money, smart money getting out. And look at how light the volume was here while I was making all-time highs. So this is just algos and pikers chasing it higher and day traders trading it. But this is how you know when a stock's really got some juice behind it, whether it's upside or downside. You check that volume there. That's why I have this little indicator, the little tan line here. It's the 50 moving average of the daily volume on a closing basis. So basically it just gives me a little like visual assist. I can tell when we're below or high or above average in volume. Oh, okay. Well, I'm glad I got to look at Caterpillar stock anyway. Yeah, I mean, maybe Jason and I will do a podcast soon. I'll talk to him about that. I talk to him all the time, so. I think the type of sell I'm looking. Was I referring to the equity markets, just like the S&P? Oh, you mean like a high volume sell-off? Yeah. So, yeah, we need to see a high volume sell-off and follow through, basically. Um, we've had a few high volume sell-offs, right here and right here, but we never had the follow through. We just never got the follow through. Um, I have I have heard from like a little bird essentially that on the 25th, so this was a Friday, excuse me, 26th, that was a Friday. Um, and then over the weekend, over this weekend, Archegos Capital collapsed. I have some good information that the Fed put in a ton of liquidity right here because they knew what was going to happen with Archegos. And it was my belief that this market was about to roll. Like it was going to roll over. Like all the work I did on it, on cycles and everything, like it was playing out pretty much perfectly. But somehow it just pushed higher. So you know, central banks pushed it up and did what they did. But and that's just the nature of the market we're in right now. But it doesn't mean it can't have a correction. It doesn't mean we can't go a lot lower. I mean, there's all sorts of things that can happen that could take the market lower that's outside of the Fed. So please, I can bench way more than that. I'm a certified personal trainer. You guys know that? Actually, I'm actually like one of my hobbies is like amateur bodybuilding, honestly. George Gavin's got a lot of time on his hands in Puerto. He's all alone in Puerto Rico. Peter Schiff's like his only neighbor. And Peter Schiff just wants to wake up in the morning to buy gold. Um, what's another? I'm trying to think of. I can think of a good example of a really good high volume sell off. Trying to think. I think this was from like one of the videos I did the other night. You're not Neo. That's not. Maybe Peloton. Not Peloton. I got to think of a good example here. Maybe let's actually. Actually, how about Apple? I bet you Apple's good. No? I mean, well, the volume's really not here on this, but you can see like that's definitely a really good reversal candle. Surprised the volume's not that good there. All right, here's a better one. It's like Amazon. So we had we had nice increase in volume here. This is distribution. Again, the Wall Street institution they can't sell all their shares all at once. They'll crash the market. So then you sell, spend a week selling, let it get back up, and he's just kind of feeding it a little bit here and there, and then makes a new high, and then you really dump it, and then you see the volume increase there, and that ended up being the top for pretty much almost a year. That's not the best example. I'm sure there's way better ones. I just can't think of off the top of my head. My max bench that I've ever done was 335. Squat was 415, and deadlift was 515. When do I cover? Like when I'm in the money. Like what are my downside targets? Is that what you're asking? It's intense. Yeah, it's intense, but I'm not quite as strong as I used to be. Ever since the pandemic hit, like I couldn't work out really that much, like, at least not as heavy. Um, and I've just been like training mostly for like bodybuilding ever since then. Really, I haven't really done. I do strength here and there, but not as much as I used to. When you My criteria for cover, so it's just the same as anything. So it doesn't matter if I'm long or short. Um, if I'm, where my target is where my target is. It's not, being short is not any different than being long in that sense. It's just all percentages. So if I'm like, let's say I was gonna go short Amazon right here, like, oh, it's going to double top, I'm gonna short it. And then, like, let's say my stop out is predetermined as close above this pivot. Well, then I just stopped out. But yeah, it doesn't really change. Being short doesn't change my strategy. It's just, it's all the same percentages. It doesn't necessarily reset my analysis, but it definitely makes me a lot more cautious. I was, and I'm sure we've all been there before, but I was like, oh, like I was convinced, I was certain that this was like we were going to roll over. This was going to be the pivot top. There's a tweet out there somewhere. I actually was like, that's it, that's top right there. And it was like the morning that this happened. Like that's how sharp the like cycle I was like convinced of. Like we gapped up in the morning, we sold off by like 11 o'clock in the morning, and I was like, that's it, we're gonna roll over. I like tweeted it out, and we rolled right over. And yeah, it was right. Just did not get the depth of that correction right. Now there's the other like, so there's another side to this analysis, and it's kind of like crazy to even like think about stomaching this, but there's an argument to be made. We're looking at the NASDAQ, right, by the way. There's an argument to be made that we're like right here, somewhere in this area, and we still have a lot more, there's a lot more upside to go, potentially. But I don't know if I've showed you guys this before. I think this is pretty interesting. Like the structure in the moves of the NASDAQ is exactly the same as it was in 2000. Just looking at the angle of the moves. So we could be in the late innings, but that's where just position management and portfolio management comes into play. You'll never see me say like, oh, you got to put all your money into VXX. Like, no. You start with like 1% and then you just build a position. That way you don't hurt yourself. Because I've been hurt doing that crap before and it's not fun. It's not fun. I don't think we're going to have a March. We're not going to have a March 2020. I'll show you what I'm like actually looking at. So March 2020 was an anomaly. Like that was a true black swan. Markets typically don't crash from all-time highs like that. I mean, you could have some big sell-offs, but not like 36% in a couple weeks. What I'm expecting more is something like this. I think we're really channeling this kind of 2007 energy, where you have this sort of, like that's how bear markets start really. It's you have this high, some selling, another high, some more selling, little pierce of that double top, and then it kind of slowly turns into a bear. And then you don't see that, you don't see the March 2020 capitulation selling till pretty much towards the end of it. Same thing in like 2011. We had this grind up, a little bit of distribution, grind up, a little bit more distribution, and then more distribution, and then you started making lower highs. And then we did have a micro crash. It was a pretty big crash, but we had the European debt crisis going on. But usually bears don't start with a crash. I mean, there could be some big spikes in volatility, don't get me wrong, but it's not like we go from all-time highs to 50% haircuts in a couple of weeks. That was last year was a total anomaly, and the amount of leverage that was in the system was just insane. That had to be unwound. Yeah, I mean, there's always going to be a catalyst. The guys I learned how to do cycle analysis from, Gareth Soloway, Nick Santiago, they were predicting a bear in February, March 2020. They were predicting that in December, January. And there's been countless times where they've been able to do that, and like they didn't know that like that was going to happen. It was just cycle work. That's all it was. But it's kind of crazy how charts and stuff like that can sort of, it's almost like the charts kind of like dictate the news. It's very strange sometimes. But we could have, I mean, reverse repo. There's problems with Wells Fargo right now. There's like, so the Archegos Capital thing, there's that too. I mean, everybody kind of just forgot about that. Like, oh yeah, it's fine, it's gone, you know, no big deal. But we're in a situation now where this market can barely stomach a 5% correction without there being massive margin calls. And leverage short volatility is so crowded right now. You had the S&P down 1% last week, and the VIX was up 18% in one day. I mean, if that's not telling you how crowded that trade is, that's just, I mean, it's ridiculous. So, and there's these problems with air pockets, right? Like there could be just a normal air pocket in the market that causes one fund to get a margin call, or one stock gets blown up and then it hurts it, and then it's contagion, and that's what the Fed is like so desperate to avoid, but it can happen. Nick and Gareth are definitely in the same kind of like mind space that I'm in. So um, definitely going to see some turbulence in the second half of this year. At least that's what should happen. But yeah, that's why they call it a black swan though, because we don't know what it's going to be. Yeah, and then now they're pulling. I mean, credit's drying up, and people are actually not even average Joes are out there avoiding like buying houses right now, because even like the average Joe knows how overheated the market is. You know how bad it has to be for somebody who knows nothing about investing to like know that a market is overheated. Usually, the average Joes are the ones buying the overheated markets. That's how bad it is. So I mean, with housing, by the way, you know what's a great indicator of the housing market? Yeah, that lumber. What's lumber doing? Lumber's getting pummeled. This is brutal. What were we talking about earlier with the elevators and the escalators? Yeah, that's an elevator. Yeah, I would. Well, you're in New Zealand though. So I don't know about how your market is there. But I told a friend of mine who was looking to buy, I was like, listen, dude, wait like 18 months. Please. Just do it. And then you got, like BlackRock that's just like buying up houses and overpaying for them. Now, Craig, I don't really follow too many. I try to stick with like the best of breeds. Um, Definitely, that's more like Jason's area of expertise for sure. But I mean, I do like own a few of them, but like the mining and royalty companies. But if you're looking for like really good insight, like I'm not the person for that for sure. I will say it was pretty disappointing though with Sandstorm got hit. It actually had a nice little recovery though, but it looked to me like Wall Street was finally starting to respect Sandstorm a little bit. I had like I had tweeted out a chart, and basically if you go back to the March lows, I'm not going to put all the indicators on right now, but basically if you go back to the March lows for right here till right around in this range, Sandstorm outperformed Wheaton, Agnico Eagle, Newmont, um, GDX. Like it was outperforming everything, including Wheaton. And so I was getting kind of bullish, like, wow, like Wall Street's finally starting to show Sandstorm some respect. If it gets back above $10, it could actually get some traction. And then some analyst downgraded them, and then eventually got blasted on Twitter for being a hack. But it's had a nice little recovery, though. Nice little recovery. Yeah, and the thing is, they never even let it. It never even hit a bottom in 2008. The government stepped in and wouldn't let that happen. Because God forbid we let like prices function like a real market. And we thought, it's funny. We thought or they thought 2008 was bad when it was happening. Now that seems like a cakewalk. Like why? Yeah, we could have made it through that. They had FDIC for a reason. We didn't have to do. I think the real killer was a QE though. As bad as TARP was, the banks actually paid that money back pretty quickly. But that QE, as soon as you just start them on that drug. Yeah, mornings. Yeah, you're right. Yeah, that's a nice reversal bar, and then you're consolidating bullish there. Yeah, I like that. Good catch. I think it's also I think I pointed this one out, but pretty much all these miners are like at 0.618 retrace. That was your perfect low, so it's a nice little spot there on Sandstorm. FDIC only has enough reserves for like 10%. Yeah, and QE isn't inflationary. Yeah, it's just a mess. I think QE was really the killer though, and it would have been bad. It would have been bad for probably 12 months, maybe 18 months, but we would have been fine. And by now we would be raging. I mean, our economy would be so great right now. Greg, I would love to help you a little bit better, but I'm not really like that's not my area of expertise, to be entirely honest. I'm not gonna like try and make it sound like I know what I'm talking about with that because I don't. So, so basically, the SPX cycle just next. Really, we're looking for something next week. So it's based on like um, a weekly pattern or weekly time count, and it's not to say that we didn't put in a high already. Like this could be the pivot high, and then we could flush next week, or we could make a new high next week and then reverse. But it's strange. Sometimes when markets top out, they don't really tell you they're topping. Like in February 2020, this little lousy candle was the high pivot. I mean, this doesn't look like anything, but that was the high pivot. I mean, look at the vol. There was no volume there. There's nothing going on. But that ended up being the high. And this was also an Opex week, by the way, just so everybody is aware of that. We're also in an Opex week right now. But yeah, so yeah, we're just looking for like a cycle at some point next week. Um, yeah, maybe we get a whopping 3% correction and like there's blood in the streets. I mean, I know it's crazy to assume that, but it's a huge correction. I mean, like, I don't know if I could stomach SPY at 425 again, but it could happen though. Did anybody hear Jerome Powell start his little hate tour on crypto today? It was actually kind of hilarious. And yesterday, he's talking about, well, once we have Fedcoin, we don't need any competing currencies. And Bitcoin has completely failed as a medium of exchange. He's so hilarious. It's like it's like How do you sit there with a straight face? Like, I know that like no matter what, no matter who they get to be the central bank, they're going to say the same things. But it's just like, how do you like? He could fill up a hot air balloon, man. And even Wall Street doesn't even defend him anymore. Like everybody, you go on to Twitter, like everyone knows how much of a joke he is. He's constantly being made fun of. Don't ever buy massive on anything. Oh wait, you can do what you want. You're good. Never mind. I know you know what you're doing. I don't like people buying massive stuff though. I don't. I did that probably like my worst trades ever were the ones where I was the most confident on, and I was trying to make something happen. I didn't actually listen to the senators. I couldn't. I don't actually. I'm impressed you have the patience for that. You're gonna find a good woman one day. I just read the headlines. Well, he was Greenspan was a gold standard guy, and then he became the Fed chair, and then he was like, oh yeah, well I just probably just print all this money, and then the second he resigned or retired, whatever, he was like, yeah, you know, we really need to get back with gold standard. We're printing all this money. It's kind of reckless, unbelievable. Oh yeah, yeah, I know what I'm doing too. That's why I make all these dumb moves. Yeah. But the best trades I make are the ones where I'm not thinking about profit and loss. I'm just making the right trade, using a small amount of capital. And the worst ones are where I'm like, oh, I'm going to make so much money off of this. I try to erase that thought process from my mind. And ever since I've erased that thought, like oh, I got to make money here. Like just look at it as like forget about the money. Like don't even think about the money. Just think about the trade and is it the right trade? And when you start doing that, the money starts making itself. The the market wouldn't even last a day. I mean, there'd be the amount of leverage that would happen if he tried to do that. Like this market freaks out when we get like the Fed freaked out and wouldn't let us have a lousy 5% correction back here. Imagine if they like raised rates to like I don't know anything, especially now with the amount of leverage. And that's what I'm talking about with this leverage, these air pockets, quote unquote. If you get an air pocket of like selling, it only takes one lower low. You take out one of these pivots, one of those little pivots, and ding ding ding, margin call, and you have contagion. I done that. Yeah, I remember in 2012 when I first like figured out what the hell options actually do, and I was like, oh yeah, like let me buy these like let me just like day trade these weekly options, not really fully realizing like into my in my defense, I didn't even fully realize like how much risk I was taking on. But let me tell you, it is like when you watch a position go from like your contracts are at like 350 you buy in and then in a half an hour you turn that into like 1200, you're like holy crap, like definitely an adrenaline rush. But yeah, that's probably why I blew up that account. But you know, everybody's got to blow up an account at least once or twice. I think that's the only way you learn really. Under MACD, let's take a look. Triple Qs. Does this look like the MACD you use? I don't know if you use a different one. It looks like it's, yeah, it looks like it's hitting there. Oh, by the way, speaking of MACD on the NASDAQ, look at this. I mean, this has been here for a while. That's a pretty big divergence. And you never even really worked off this one. So NASDAQ running out of gas. NASDAQ's been running out of gas for a while. The only thing keeping it up is the fumes of Jerome Powell's printer smoke that injects liquidity every 5 seconds into this market. Quote unquote market, because it's not a market anymore. And now if you guys notice what's happening, a lot of individual names are selling off, but they're still just bidding up the index options. I don't want to sound like I'm, repeating myself over and over, but again, that's a way for institutions to distribute shares. So you sell off the shares that you own in individual names, and then you use some of your side cash to bid up the index options so that the market doesn't roll over while you're trying to get out. I know, as I talked about Gareth Soloway earlier, I mentioned him. He'll tell you he had a day where he lost, like, he had $100,000 portfolio, and he was working like 3 jobs, just because he just was just grinding, and like he wanted to be a trader and do all this stuff. He finally got up to $100,000, and one day he lost like 70K just day trading. And now he's, a huge bigwig. But that just goes to show you, like, you can still, no matter how bad it gets, you can always pull yourself out. But so if you think you've done some bad stuff, made some bad trades, probably have, but there's some really successful people who've made even worse ones. And I've learned the most important thing is to never give up on yourself, and just always just keep grinding. And never be too hard on yourself too. It's easy to be like, oh man, I should be doing that, I should be here, I should be here. But you probably are doing really well, man. You are doing good. You just don't realize it every day. Yeah, you day trade. Yeah, so what you do is and the spreads are way worse than what they used to be. But I used to trade Apple, Amazon, and Netflix a lot. But the spreads this was back when, pre-split, Apple was probably like 170, Amazon was like $200, Netflix was like $200 a share. But these spreads suck. This is part of the reason why, let's just go to next week, because that's kind of ridiculous. But this is part of the reason why I don't even trade options that much anymore, because it's like there's so many people trading them now that like the premiums are just ridiculous compared to what they used to be. You used to be able to be like, so Apple, like this spread would be like $1.83, but then like the next strike would be like $3.50. So it would be like, if I take on this risk, it's actually gonna reward me. Whereas like for now, it's like, the way it is now, it's like, okay, so what? I'm gonna get like 45 cents. That's my upside for something that has a theta of, let's see, get 14 cents a day. Like that, come on, get out of here. Like, they're just so expensive. They're so expensive now. They set you back. That's it. That's what it is. Yeah, in time. Yeah. Fitness tips. Burn more calories than you consume. No, those aren't after hours. This is just a close. The hours don't, options don't print after hours. When I say, I'm sorry, when I say spreads, I mean, I mean the spread between the each strike. I'm not talking about the bid-ask spread. I'm talking about so the 148 and the 149 has got a 30, almost a 45 cent spread or so. That's what I'm not talking about the bid-ask spread. Oh, that's it. But that's another thing. That's another thing, though. I've also learned is don't ever trade options in the first 15 minutes, unless you want to put in like a fishing bid, like the spread's like 183. You put in like a really ridiculous bid that you don't think will get filled, because sometimes it will get filled, but never chase those first 15 minutes. That's how you immediately lose money. Why? So I can teach you how to lose money trading options? I'd probably do. So I've been thinking about doing some type of paywall thing, but I would probably do some type of service similar to what Jason does, where it's like just a couple bucks a month, and like you get some trade alerts, and then I would probably do some courses, like, and those would probably be like, $50, $100 or whatever for a course, but it would be like a good 3-hour course where I'm just teaching you out like my methodology and just other things. And I could do like a beginner. I probably for options I could just do like a beginner video on that, because I'm not like an expert at options trading. I mean, and I know what I'm doing, but I don't really trade options that much anymore. But for if somebody is a beginner and wants to learn how gamma works, I can definitely help out with that. But oh yeah, it's like if you look at the options on just like any, like Amazon, March 20, this isn't even a leap. We're just going to go to March 22nd here. The Thinkorswim doesn't freeze. Oh, there we go. Yeah, so for one contract, you got to pay $3,576. Like, why don't I just buy the underlying stock at that point? It's 3,600 a share. Might as well, and not have to deal with the theta. I mean, ridiculous. And this isn't even a leap. This is just March 2022. Yeah, the miners could get rocked on that. But it depends on what gold does. A lot of time gold will sell off initially, because, oh, and I want to talk about something real quick. I like George Gammon a lot, but he said something a while ago that I don't necessarily agree with. It was about, actually it might not have been Gammon, it might have been Peter Schiff. I think it was, but he was essentially saying like, oh, like during this panic, like people were stupid and they sold their gold, and really they should have just been buying, and you see like this is a great buying opportunity. What you got to understand is this is what gold is for. Gold is a SHTF scenario holding. It's what you those types of scenarios where you're getting margin called for billions of dollars. That's what you sell your physical gold for. That's what that's what it's for. It's for a absolute nightmare scenario. So it's not like they were stupid selling the gold. No, they sold it because they had to. They were getting margin called. And then the ones that had liquidity were able to buy it back up when it hit the, it pierced this 200 moving average. So it's not, you got to understand, margin calls affect gold. When markets have massive sharp corrections like that, gold can sell off initially and then rebound. So it's just, it's made like you'd think, right? It was Peter. You'd think for as long as he's been doing this, you'd understand like how the market works like that. But yeah, I mean, you think that they want again. You think that the hedge funds were stupid? They sold Amazon because they're just stupid. They sold Zoom because they were just dumb. They sold Apple because they were dumb. No, they sold because they had to. They didn't want to sell. You don't want to sell Apple, like especially given the fundamentals of what was going on. So, do you think they wanted to? Do you think the hedge funds wanted to sell semiconductors? No, they had to. It's just margin call. It's just the inner workings of the market. That's all it is. Nice. I think I can bench press 600 ounces. Yeah, you could. I can. I used to when I traded options, David. I mean, I still do sometimes, but when I traded options, yeah, I would stop. I would literally stop out sometimes. Sometimes a lot of traders will trade options, and they're just like they let it literally will let it go to zero. And it's just like that's just like a gamble. Like I'll stop out though if it goes through. Like I trade it like a swing trade. Let's say let's say I went long the semis. We just use this as an example. Who cares? Um, and let's say if it closes below this pivot, I'll stop out of my option. My call options. Yeah, I'll sell it. I don't care if there's still. Yeah, like why wouldn't I? I don't understand that why you just let it go to zero. Unless it was really just a you know lotto type option or something. Yeah, and a lot of people were. I was telling people, a lot of people were trying to chase these miners at that time too. Um, and I was like, listen, don't chase here. Don't ever chase stocks. Don't ever chase. Don't FOMO, because look it, you're gonna get a chance to buy it again. Look what happened. He is an asshole. He's like the most hilarious broken record ever. Like he is a really he does like some really good macro commentary, honestly. And he's so good at getting people to understand things in layman's terms, but I think people would like him a lot more if he didn't speak in absolutes with everything. I know that's why he gets all sorts of hate from like the Bitcoiners. He gets trolled by them constantly. It's actually kind of funny. All right, guys. I think I'm gonna get going. We've been going almost 2 hours. Well, I've been going almost 2 hours, but the first 10 minutes, I wasn't going live. So, but anyways, you guys take care. Thank you very much for coming out, and I will talk to you again very soon.